And in all honesty, at this point, I'm usually ready to invest in the ETF. I've looked at the ratio, I've looked at the AUM, I've looked at the holdings, I've looked at the tracking error, and if these things all look good to me, I'm definitely picking my ETF. But if you're still kind of unsure, there's definitely one more thing you can do. Hey guys, Christian Mar here and welcome back to my YouTube channel. If this is your first time here guys, welcome. What I do here, I talk about earning, saving, and investing, and basically give financial tips that I hope help you to become more financially confident as you work with money and try to build wealth over time. What I want to talk to you about today is how I go about picking my ETFs. And if you're like, what are ETFs and why am I talking about this? Just click right here and go watch my last video. I recently shared what I hold in my Roth IRA, and it's basically what I hold. I basically hold a portfolio of ETFs. So go check it out, click the link right here guys, and yeah, let's get into it. So an important thing to know when you're building a portfolio is you want to know and understand what you own. So if you're looking to build a portfolio and you're like, okay, I want to put some ETFs in there, or you have a portfolio but you don't have any ETFs, and you watch some of my videos and you're like, okay, let me try to mess around with some ETFs. You want to know that not all ETFs are created the same. They're great. They're great things to put in your investment portfolio, but you really want to understand how to pick one, how to navigate the space, and then also there are new ETFs every year. So how do you choose which ones go into your portfolio? Keep watching this video. I'm gonna let you know how. So like a lot of people, some of the things I like to look at are the expense ratios and the assets under management for like any ETF. Some people may say these are, not that important. And I may agree, but I think they play a very big role into my personal decision. But probably the single most important thing is the underlying index or whatever that ETF tracks. And again, if you watch my previous video, and if you haven't, click right here, you'll see how the underlying index or the underlying holdings kind of drove my decision into picking my ETF. So the single most important thing is the underlying index that ETF tracks. Again guys, not all ETFs are created the same. Get that through your head, and I'll say this again throughout this video, not all ETFs are created the same. So a good example of this is you take the S&P 500 and the Russell 1000. They hold different sizes, but at any given time over any given period, they probably have the same performance. So in this case, you may be like, yeah, the index doesn't really matter that much. But in other cases, it really does. Take the Dow 30 and then the S&P 500. Those index neither look the same nor do they perform the same. So indexes really do matter. And as you decide to put ETFs into your portfolio, you really want to keep this in mind. Look at what index that particular ETF is tracking. See if that's the index that you want to track. See if that index has the stocks that you want to exposure to. So again, this is one thing that you want to consider, the underlying index of the ETF. And before I forget to mention, you can see what the holdings of an ETF are. You can look at a fact sheet, a prospectus. Many of these websites disclose what the holdings are at any given period. I think some of the ETFs change their holdings at some point depending on which fund management firm that's offering that ETF. But if you want to know like what sector, the geographical breakdown, what the holdings are, you can really look into that. And then also pay attention to how the holdings are weighted. So one ETF, for example, may hold 3% of Amazon, another one may hold 5% of Amazon. If you want more exposure to Amazon, that may be something that is important to you. So keep in mind, look at the holdings, get all the details you want, and really dive into the prospectus, the fact sheets, and whatever information you can get that's going to help your decision. So to summarize, the first thing you want to look at, the fund's underlying index. Next, you want to look at how high is the tracking difference, or how much is the tracking error. So I guess piggybacking off the first thing, because the fund is benchmarked against a particular index or is tracking a particular index, you want to see how far off your ETF is to tracking that index perfectly, or how much does it vary per se. And again, like I said, I like low expense ratios, but it's not just what you pay for the fund or the ETF, it's what you get out of it. So you want to pay attention to the tracking error of your ETF that you're going to choose, or you think you want to choose. And so what I'm really saying here is that if you choose to invest, or you're looking at ETF that tracks the S&P 500, for example, if the S&P 500 is up 10 0.25% for the year, your ETF should also be up 10.25% for the year. What that means is it's really tracking S&P 500 perfectly, and it's doing what it's meant to do. No, perfectly isn't the right word to use, because there are fees, like the expense ratio that creates fees for your fund, or the fund manager charges you fees to track the S&P 500. So say for example the fees are about 0.25%. Your ETF, instead of being up 10.25%, would be up 10%. So it's 10.25 less that 0.25% from fees. So while the S&P 500 is up 10.25%, your ETF is up 10%. No, that's up to you to determine if that's a low enough tracking error for you, but that's how you think about tracking error. But beyond fees, some indexes are easier to track than others, and some fund managers really do a good job at tracking their index. So yeah, it really depends, guys. And I know you may be wondering like why some indexes are easier to track than others. And so there are two strategies to track indexes. There's what you call full replication. So if, again, we're talking about the S&P 500, a full replication strategy will basically track every stock in the S&P 500. There's another strategy that is called sampling. What sampling is, it doesn't track every index. It tracks a portion of the index. So maybe 80 to 90% of the index. And this may be driven by that the stocks in there are too complicated, there's too much turnover, or it's just inefficient for the fund manager to do so. As you look at a prospectus, you can see what strategy the fund manager is using, how they're tracking versus the index, and you can get all this information that helps you decide, how much tracking error you're going to take on if I choose this particular ETF. But all in all, guys, the lower the tracking difference or the lower the tracking error, the better. And this is something that I look at when I'm investing in an ETF or I'm picking an ETF, and something for you to consider as well. And in all honesty, at this point, I'm usually ready to invest in the ETF. I've looked at the ratio, I've looked at the AUM, I've looked at the holdings, I've looked at the tracking error, and if these things all look good to me, I'm definitely picking my ETF. But if you're still kind of unsure, there's definitely one more thing you can do. The third thing you can do is you can ask yourself, how liquid is the fund? Or you can find out how liquid is the fund. And the fund's liquidity stems from two sources: the liquidity of the fund itself and the liquidity of the underlying shares. So funds with higher daily trading volumes and more assets under management tend to trade at tighter spreads than funds with less daily trading volume and less assets. So as I talk about higher average daily trading, I'm talking about volume, and there's no perfect rule to what constitutes the sufficient trading volume. But generally anything with over, I think, about $10 million in, average daily trading volume is considered liquid. And basically what they're saying is that there's an ease in the buying and selling of that particular ETF. And in terms of a tight spread, anything below I think 0.1% is considered tight. And so when someone uses the word tight here in terms of a bid-ask spread, what they mean is that it's trading close to its net asset value. So if something's worth, I don't know, $3,000, it's someone's not asking $2,500 for it because they think that it's worth less. They're asking pretty close to what it's worth. So maybe $2,950 or $3,100. So nothing outside of the range, but just things that are pretty close to the price. And so it's trading close to its intrinsic value basically. And as I talk about volumes and spread, this is going to depend on your time horizon and your cost sensitivity. Again, going back to one of my videos that I posted, a lot of your investing really comes down to your time horizon, your risk profile, and a lot of things about your profile as an investor. So as you just think about investing in ETFs, you really have to be honest with yourself. You really have to do the research, and you really have to understand the vehicles that you're investing in. And so the bottom line here is that there are multiple factors you can consider when picking an ETF. I have my personal factors, you may have your factors, but they definitely do not correlate. And I hope, again guys, I'm going to say this, I'm not a financial advisor. So do not take the things that I like or the things that I've used to pick my ETFs to go and pick your ETFs. Understand what you're investing in, look at the details, and pick your ETFs accordingly. So to wrap up and to really give you a refresh of what we talked about, factors you can consider are the expense ratio, the assets under management. If you still want further details, you can look at the underlying index the ETF's tracking, the tracking error of the ETF, and then last, you can look at the liquidity of the ETF. Again, guys, you know, like I said, only about 4 or 5 of these kind of matter to me initially, but if I want to do more research, I'm probably looking at the fifth one, which is liquidity. But again, you know, I understand my time horizon, I understand my cost or risk sensitivity, and you have to understand these things and be knowledgeable of your risk profile before you decide to pick your ETFs. You know, if you don't know who you are as an investor, you don't know what your goals are, you don't know what type of vehicles you want to use, then you're really not ready to just get into picking ETFs. And again, if you want to know how to build a good portfolio, click right here and go watch one of my previous videos, guys. So if you learned anything today, please give this video a like. If you think there's anything interesting, anything you have more questions about, leave a comment. Please ask me a question. You know, like I said, if there are people that you know are getting ready to pick ETFs or have a portfolio they want to introduce some ETFs in, share this with them, and I hope it teaches them something. I hope you learn something. And just stay tuned, guys. Keep watching. Thanks for the support, and I'll see you next time.